Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris. And joining me today is Nicole Adshead-Bell, Principal of Cupel Advisory. Nicole, welcome back to Kitco.
Thank you very much for having me again, Paul. Great to see you.
Likewise, please note that Digging Deep is not investment advice and the opinions expressed today are our own and not Kitco's. Nicole, it's been an eventful few weeks with some good, some bad, and some ugly. If it's okay with you, let's start with the ugly. Victoria Gold experienced a heap leach pad failure at its Eagle Gold mine in Yukon, Canada this week. No personnel were injured, but operations were suspended and there was damage to infrastructure as a portion of the failure slid beyond containment measures. After being halted, the stock fell 82%, shedding some $400 million Canadian from its market capitalization. Ventum financial analyst Alex Terentiew, who has a $14 per share price target on the company, said the incident will negatively impact Victoria Gold's valuation as it may not be possible to recover the gold contained in the heap leach material that slid. Victoria Gold has a history of cyanide spills at Eagle there. Nicole, things like this are always shocking, but why do they occur? There doesn't appear to have been any seismic activity, so what are the other possible causes? Is it a design flaw, poor execution, poor management, or just plain bad luck?
I think it could be any combination of the above. Obviously, we've had another unfortunate, very material slip in a heap leach with SSR's Cupel mine in Turkey, and unfortunately, there was loss of life associated with that. So we've had two within the last 4 months, and both of them, I think, share one criteria: is heap leaches are either occur where they're laid in flat terrain and stacked, or in a valley fill situation, or more in steeply incised terrain. And both Victoria and SSR's heap leach operations were in valley fill, so more steep terrain. I would argue that whenever something like this happens, it's probably a combination of an engineering design failure. Basically, these heaps are designed never ever to fail. But if we look at them, and the world has been very focused on tailings dam failures, and both heaps and tailings dams share stacking of material, but heaps, you're purposely saturating that heap because you need the lixiviant that's flowing through that is going to extract the gold. And so we will not find out for a period of time. It's a very, very, very material event. And if you go and look at Victoria Gold's most recent financial statement, they have a lot of debt on the balance sheet. They have a material amount of debt that is due this year. And I think that is with a mine that is suspended. We don't know how long that will be suspended. And so the debt holders will, of course, be looking at ways with which they can get some money. So normally in this type of situation, you'd see a fairly ugly equity financing. And I think hence that explains the share price performance.
I want to talk a bit more about the financial future for Victoria Gold, or the uncertain financial future for Victoria Gold in a moment. But before we get there, and I want to put lots of caveats around this next phrase or question, because I'm not making any allusions to Victoria Gold with this. But Victoria Gold is a single asset junior. It was a single asset junior who developed a gold mine, always been relatively capital constrained. And so I imagine in those kind of situations, the companies, I won't say they're always looking to do things on the cheap, but obviously they're very cost conscious. And there's a history of single asset developers not succeeding. Red Eagle Mining in Colombia being one of them, Pure Gold Mining in Red Lake in Ontario being another. It seems that companies in that position often don't have the capital they need to either pay for the professional technical services they need to do all the work they need to do, or something of that sort. And again, I repeat, we don't know what's happened at Victoria Gold, so I'm not making any illusions there. But these things seem to have a habit of happening to single asset developers.
Look, mining is an incredibly risky business. We all know that. And having a single asset means obviously that you are exposed to any issues with that asset, whether they be temporary in nature or permanent. And so I think maybe the warning signal of that is single asset producers you would want to be combining with another company so that there is an issue with your asset. But I think that you're right. Any single asset producer, unless you've had perfect execution, you've hit an upwards trend in the underlying commodity price, will be more capital constrained. It's an emerging producer. So that's the nature of the beast. I just think what Victoria Gold demonstrates, unfortunately, and look, it's unfortunate for Victoria, it's unfortunate for their shareholders, and it's really unfortunate for the mining industry. And I blow the horn on this endlessly, but the biggest challenge that we face in mining is one of reputation, and obviously events like this do not help. But what it shows is the risk of being exposed to single asset developers, and there's a number out there.
Okay, and you were alluding to this, Nicole. Could this slip be a company killer? There's damage to the infrastructure that would need to be replaced if a restart is possible. The leach pad to rebuild, possible fines or probable fines for environmental damage. As you mentioned, the company would likely have to secure additional finance, given that it ended the March quarter with about 29 million Canadian in cash, 40 million in current debt, 192.3 million in long-term debt. The cash is no longer flowing. A lot of the inventory on the leach pad is slipped away and may not be recoverable. At the end of the March quarter, that was some $255 million, give or take, of inventory. So I guess the question is BGCX FUCK?
Potentially, yes, absolutely, of course. An event like this, we don't know what the regulators will say. We don't know how permanent the damage is, and they're in a very, very precarious position with their balance sheet. So absolutely. And look, you've probably seen the same as I. There's photographs flying around the internet where people have flown over since the slip, and it does look very material. So it's bad news all around, unfortunately.
Well, one interesting thing is I've been sort of, researching the backstory of this. The company had a cyanide spill of about, I think it was 70,000 litres in 2020. Following that, the Yukon Water Authority tried to effectively increase the bond that Victoria Gold had to put up. They tried to increase it by 60 or 70 million. That was struck down by the courts on appeal by Victoria Gold. And it seems that that money would have been very necessary now to help remediate the situation if the Yukon Water Authority had been able to increase the bonding there.
Yeah, absolutely. I mean, generally, I think what happens with these kind of events, if you look back, is that there are often warning signs in hindsight, whether it was a Brumadinho tailings dam failure in Brazil, obviously what's happened in BC, and they were tailings dams, they weren't heap leach, but also then some of the rhetoric that's coming around about SSR. And then with Victoria is how much warning did the company have, if any, that something of this nature was going to occur, and what kind of remediation measures were put in place, if any? So, it's something that we'll find out going forward. But again, it's bad all around. It really is.
Okay, and that badness could spread further or have a broader implication because there's other projects in the Yukon that are moving forward towards production decisions and hopefully being permitted. But a year ago, Yukon received another setback for its mining aspirations when the Minto copper mine was put into receivership, having faced concerns about its water management. The territory also saw major miner Newmont turn its back when it announced in February that it would put up its Coffee Gold Development project for sale. There's several projects going forward that are getting towards that production decision stage. Western Copper and Gold's Casino, in addition to Coffee, as we mentioned. But also you've got Snowline Gold's Rouge Gold Discovery. They released a maiden resource of more than 7 million ounces a week or so ago, which we'll talk about a little bit later on. Firewood Metals with its Mac Pass Zinc and Mac Tungsten projects. I imagine at the very least, Nicole, these future projects are going to face more environmental and social scrutiny from regulators and, of course, the Native Americans, the First Nations.
Absolutely. Look, everywhere in the world, the key focus for everybody is water, and that's water use and potential for water pollution. And so an event like this will increase the regulatory and permitting burden. And we have to remember that regulators, their compensation doesn't change if they approve or disapprove an asset going forward. And so in a situation like this, I think regulators tend to be very, very risk averse, and it's very, very easy to continue to pointing to an example like Victoria Gold, which is unique set of circumstances. It's a unique asset. Every single asset is different. All the ones that you mentioned will have a different approach to mining and processing, and then a different risk profile. But we live in a world where people don't really understand mining that well, and so absolutely, and it's not just going to impact the Yukon; it will impact Canada, and it really plays into the hands of the anti-mining crowd. And so events like this, I think, impact permitting and regulatory environment globally, not just locally.
Okay, well, it'd be interesting to see to what extent or not it does impact projects elsewhere in Canada. And let's move on to some good news. And there was some good news for another development project, gold development project in Canada, as Skeena Resources secured a US $750 million financing package from Orion Resource Partners for the development construction of the Eskay Creek gold silver project in British Columbia. The Orion package, which includes an equity investment, gold stream, senior secured loan, and a cost overrun facility, means that Skeena now has about $794 million of available capital for the project, which has a capex of 713 million Canadian. There's a lot of flexibility in that package, plus Orion becomes a major shareholder. Nicole, what are your thoughts on this package?
Look, Orion is a one-stop shop, and they have been, I think, forward-thinking and clever in the way that they approach their business. And so they're exposed to all aspects. And when you speak to companies that are speaking or dealing with Orion, there's a preference for dealing with entities like Orion because of the flexibility with which they construct their financing packages. And we've seen whether it's the Orions of this world or the Francos with their G mining investment that are really taking the place of the banks. We haven't seen the traditional banks like we saw last cycle as being big providers of development capital. Now, what does that say? Maybe that says that the banks think that it's too risky. But you would look at an Orion that has had both successful investments and less successful investments, but they understand the risk reward proposition. And you can bet your bottom dollar, if you ever get exposed to the nitty gritty of these agreements, the suppliers of capital also ensure that they protect themselves every step of the way. And so often these agreements are mostly not public, but one would assume that Orion has, that there will be step by step, there's certain hurdles that will have to meet, et cetera, et cetera. But what it does say is Eskay Creek, it's an incredibly high grade asset. They've done a great job of advancing it. We're at I think, bias is showing here we are at the green shoots of a very, very strong gold market. And so those companies that are getting invested and exposed at this point in the cycle, as we know, is cyclical, will probably do well if the company can deliver.
I think it's interesting because you mentioned the banks. The banks, when they lend money, they tend to have a plethora of covenants which really restrict what a company is able to do as it progresses. But this, so there's no penalties for prepayment of this or that. There's not the same level of covenants. There's no need for hedging from what we've seen publicly. So it does seem that Skeena will have a lot of flexibility as it goes forward, as it starts cash flowing to work on its balance sheet and see how it wants to manage that going forward.
Absolutely. And I think that's Orion. I think the Orions of this world, and they have some competitors, but they can move faster than the banks and they're more flexible than the banks. And so they tend to, and more aggressive, arguably, than the banks. So I think it's a great signal.
Now, also for Skeena, it means it minimizes the amount of shareholder dilution because there's only a small component there. But having Orion as an investor is perhaps a very good thing at the moment. But some of their recent transactions have shown that when assets they invest in start cash flowing, they're very quick to exit that. Obviously, the most recent example is perhaps Greenstone and Equinox Gold. To what extent is that a potential concern for shareholders? That perhaps what may be just under a 20% shareholder is going to hit the exit button as soon as gold starts pouring.
I mean, look, I think that any large investor in any entity one has to be aware of. I would say that in their exits, they have done that in a non-destructive fashion. So in a way that hasn't materially harmed. If they were just going to go and hit the bid, but it's been big secondary sales, it's been a very well-managed exit when Orion have exited these big positions. And obviously, just as an aside, Orion sold their royalty to a Cisco, sort of good timing. I can't recall the exact time. I think it was last year. So look, they are not long-term holders. I mean, they're there to make money. And when they have reached their intended investment objectives, they exit. I mean, I think that's known, but I also think that they're not going to bite off the hand that feeds them. And so it will be a managed exit. So I would have less concerns about that.
Okay, let's talk about geopolitics and let's go to the other end of the hemisphere, to Argentina, in fact, to the Southern Cone, where President Javier Milei's landmark RIGI infrastructure investment bill was passed in what seems to be good news for miners. The passing the bill will eliminate export duties on metals, reduce taxes, and allow the repatriation of earnings for mining projects that require more than $200 million in upfront capital investments. Projects accepted into the program would pay 25% in income tax instead of 35%. They may pay value-added tax with credit certificates and would be exempt from certain import duties and all export duties after 3 years, amongst other benefits. What do you make of this, Nicole? This bill has still got to be passed as part of the overall passage of Milei's omnibus package of legislation. How positive is this for the raft of copper projects that are advancing towards the development stage in Argentina?
I think it's incredibly positive. And coincidentally, I was in Argentina at the time that the bill was passed. So we'd been invited to go up to Mendoza by Impulse Mendoza, because really the main aim of that organization is to get people more comfortable with mining and change the opinion of communities and business people in Mendoza. And so it was really interesting talking to the Argentine. So we presented to non-mining people and speaking to there was about 50 people there. So speaking to the Argentines, they feel that for the first time that in a long time with Milei, that there is a very, very positive sea change, and that getting this bill passed through the initial stages, I think there's a lot of hope that things are going to change and change for the better in terms of attracting foreign investment into the country. And obviously that's been a very, very, very big issue over the last 10, 15 years. And Argentina has got a wealth of natural resources, whether it's mining, it's got potential, it's got world-class deposits that are being defined as we speak. It's got a huge amount of potential for copper. And obviously it's been a difficult environment to advance projects. And so I see this is incredibly positive. So if Milei can continue to garner support, and that support across the social profile and encourage foreign investment, and then Argentine start to see the positive net impact of that, I think you end up being in a virtuous circle. It's great to see countries moving in the right direction versus the wrong direction.
Did you get a sense when you were on the ground in Argentina, Nicole, of what the common person feels about this? Because President Milei has proposed some very, very dramatic changes. He wants to really shrink the public sector. He doesn't like the union, so he's taking measures that the unions say are anti-union. Obviously, the governors in provinces, mining provinces, think it's all great, and yes, we need to make these changes. But there will be a cost that in the short term at least, a lot of the general population will bear in terms of perhaps additional hardship, adding to the cost of living crisis, things like that. Did you get any sense that there is perhaps a groundswell of opposition building to this, that he may face a lot of public protests as the passing of his omnibus package gets closer to becoming a reality?
I was speaking to predominantly business people, and they felt that despite the fact that there's going to be short-term pain, I mean, one of the reasons why he was elected was this incredible groundswell of support from people who've struggled from a lower socioeconomic background. And for the business people that I spoke to, particularly in Mendoza, that's where I spent the most time, for them, they recognize the challenges that you just outlined, but they were also saying that there was such support for him. And he's also very, very good, and this is speaking to the Argentines, anecdotally, they say he's incredibly good at communicating across, I suppose, the wealth and class system. So very, very active presence on TikTok and Instagram, and is very good at messaging in a way that resonates with the average voter. And so that I came away feeling that there's a very, very strong, positive view about what Malay is doing and the potential for real fundamental structural positive change in Argentina. And look, we've talked about this previously, Paul. We have got very, very material looming shortage of copper. You've got Argentina that obviously shares a belt of very, very prolific rocks with Chile. And there's no reason why Argentina can't be a copper producer like Chile is. It just needs to be a more welcoming environment. So it's going to be fascinating to see what happens, but definitely green shoots.
Well, let's hope Argentina can get over these humps for the benefit of the copper sector and, of course, the people of Argentina. Another potential green light could come in Serbia, where Rio Tinto apparently is going to get a green light to produce its Jadar or bring it into production its Jadar lithium project, according to reports in the Financial Times. Jadar is a $2.4 billion US project that was blocked on environmental grounds in 2022. Potentially 58,000 tons per year of lithium production there. Nicole, this is potentially very positive for Rio, obviously, but I wonder what the 30,000 people whose signatures the Serbian environmentalists collected in 2021 and 2022 will think about that. Again, would there be a mass protest to say, actually, we still don't want this?
I think there's a difference between application of a signature and mass process, because mostly I would say inertia rules. I think the issues that Rio Tinto, when you start to delve into how companies are conducting themselves and their ability to advance assets in the world, sometimes when they have challenges, those challenges are somewhat self-induced. And so with Rio, arguably maybe they didn't do the best job in terms of building a groundswell of support, of dealing with the local communities, ensuring that they're building relationships at all levels, being very transparent about what they're doing and what the mine is and what lithium is and the net positives that it can bring to the country. And so if there is a positive shift from the government, obviously no government is going to lose votes for being hard on mining. I would say if there's a positive mood swing from the government, often that means that they feel like local communities and locals are starting to be supportive, or they won't be negatively penalized as a government entity. And so I'm assuming that Rio would have been out there trying to change hearts and minds. And if it's moving in a positive direction, they've probably been somewhat successful at that. Will there be opposition to mining? Absolutely. There always is. And Serbia is not a hard place to get to.
Okay, yeah, I imagine the government has been taking the pulse and it's detected that perhaps it will be more favourable now. Also talking about favourable things, and this is a big one, Agnico Eagle Mines completed an update reserve and resource estimate for the life of mine plan for its Detour Lake mine in Ontario. The PEA contemplates adding an underground mine to the open pit, optimizing mill throughput capacity of 29 million tons per year, and that could potentially add another 300,000 ounces a year of production to the mine, bringing it to more than 1 million ounces a year for 14 years from 2030. Wow, Nicole, 1 million ounces a year, that would be quite something.
Absolutely. Well done, Agnico. Look, Agnico are the best in the business in many ways. They are continually understand that key ingredient in our sector that 99.9% of companies don't get, and that is under promise and over deliver. And they have consistently done that throughout the life cycle of the company, and their share price performance demonstrate that. And then to come out with material organic growth with an existing project in a rising gold price environment, well done, Agnico.
Interesting your comment there. I completely agree with you. Agnico does seem to be the major gold company that continues to deliver and improve in a way that the others struggle to. Why do you think that is? What's its secret sauce?
Maybe a lack of hubris versus some of their peers, names not to be mentioned. Look, I think that they understand that for you to grow, you need to be active in M&A. And so when you look at what they've done recently, I'd put them to some degree in the same bucket as B2, which is we'll see how Sabina goes, but B2 grew through M&A and smart M&A and add value with every step that they did on that M&A. And Agnico really has done the same thing. And so they kind of haven't come out and made motherhood statements that they're never going to buy or they're never going to buy at a premium. And if you do that, who would actually deal with you like some of their peers. So they have done smart M&A and they've had added value. And I think that they understand their core competency, which is North America and Europe. And so I think they're disciplined. I think that they are obviously a very smart group. And they also understand how to deliver a message that is do what you say you're going to do. I mean, that's a very, very simple thing, but very few in our industry can do that. And so Agnico, I think, are proving that they continue that positive trajectory.
I think further along to the east in Quebec, in the Val d'Or region of the Abitibi, I think there were a lot of groans when this came out because there's a lot of juniors there whose game plan basically is to eventually sell up or be bought out by Agnico Eagle Mines. But if Agnico's got a 300,000 ounce underground mine to develop, they could be waiting for quite a while longer.
Yeah, but Agnico, again, this is where they are smart as well. I mean, they have a history of taking quite sizable positions in juniors and not necessarily wanting to own or curtail those juniors in perpetuity. And so they've taken big equity positions in juniors that they've then taken over. They've taken big equity positions and then they've sold. And so again, I think that this kind of alludes to that Agnico. It's a bunch of smart business people that understand the business of mining, but also understand how to message it and message it to investors. And at the end of the day, investors that want to be exposed to gold stocks, particularly institutional investors, they just don't want to wake up to a company doing something really stupid and then seeing the share price decline materially, and then you get it. I mean, I worked on the buy side, and if a company that you pitch to your boss underperforms, and then you wear that personally. And so I think Agnico really understands the messaging side of it as well versus some of their peers.
Okay, I'm going to make a very clear point that my next question isn't related to what you've just said to cover our asses. The gold equities often moan about the lack of investor interest in the sector. And then when you see incidents like what happened at Eagle, for some people, it serves to remind them why they don't invest in the mining sector or why not to invest in the mining sector. So how important is news like Agnico's about the possibility of expanding this already very impressive mine? How important are success stories like that?
Incredibly important. Look, we in the mining industry, we're very, very good at punching ourselves in the face continuously. We don't need to be criticized by others. We're very, very good at kind of causing problems for ourselves. And that's frustrating. I think we're doomed to make the same mistakes time and time again. And this time it's different is the foremost dangerous words as an investor. But if you understand that and step back from that, then you can invest in the cycle. And so we're at the point of the cycle where we are seeing material gold price rises, but we are not seeing really, really material equity performance, except some of those standout exploration successes that haven't yet had reality inject into them. And so I think that the general investing community will start looking at our sector probably as the H2 results start to come out, the June quarter results, because we've seen plus $2,300 gold throughout this whole quarter, and we'll see and stabilizing inflation, if not slightly declining inflation. So we're going to see material true margin expansion. And I think that will start to attract the interest. But then what we see is companies, and it happens every single cycle, investors will start demanding growth and companies will start redoing their resource estimates, using lower cutoff grades, et cetera, et cetera. And so you end up in that kind of CapEx margin decline scenario. So the frustration that investors have with this sector is this sector makes the same mistakes over and over again. But I think there's money to be made if you acknowledge that.
Okay. Now, we haven't prepared you, or I haven't prepared you for this, Nicole, but it's quiz time.
Okay. Oh, no.
How many mines produce more than 1 million ounces a year? What would be your guess there?
Really few. 5? Less?
Oh, that's very good. 4, according to S&P Global Market Intelligence. And which ones? For a bonus point, which ones?
Oh God, Paul, you're terrible.
One of them's doesn't really count, but they've got it in here, so we'll count it.
Nevada, obviously.
Nevada Gold Mines, yep. Which actually is a compilation of different assets.
It's a compilation of different assets. I actually can't think of one in Canada.
Nope, there's none in Canada.
Australia. Does Australia have one?
Nope.
Okay. Now I'm stuck. I'm stuck after.
Okay. According to S&P Global Market Intelligence, Morananto in Uzbekistan,
right? Yeah.
Grasberg in Indonesia, and Olympiada in Russia.
Yeah. So Marintal, Grasberg, and Russia. Yes, of course, Grasberg. I mean, that's a spectacular mineralized system. That's a one of a kind. Okay. No, I wouldn't have guessed all
The
those.
other places we love and we speak about all the time. Now, let's end on a sort of high note for most of it. We started on a sour note in Yukon. Let's end on a high note in Yukon. Snowline Gold announced a maiden resource on their Valley deposit at Rouge in Yukon, an indicated resource of 76 million tons at 1.66 grams per ton, more than 4 months. And for the 3 billion ounces of inferred materials, there's more than 7 billion ounces in total, including a very high grade of more than 2 grams per ton near surface starter pit. The company's got 25,000 meters of drilling programmed for this year. I spoke with CEO Scott Burgall earlier this week, and he said, given the light of what's happened elsewhere in the territory this week, Yukon really needs a world-class project even more now, because so much of the economy depends on mining. So many contractors are out of currently not working because of the suspension at Eagle. The airline's impacted, everybody's impacted. So he said it really brings home the need to have a world-class project there. Nicole, Snowline has been touted as the next big thing for quite a while now. How well do you think it delivered here with this maiden resource?
The struggle that Snowline faces and Great Bear faced, but they sold before that truth meter came out, is when you have a wonderful exploration discovery, and Scott and the team have done an incredible job. It's a great discovery, and they've done a great job expanding it and delineating a resource. But the problem is the market, when the upside is unknown, i.e. there's no reality in a story, the investors assume they assume limitless upside. And so very, very rarely do stocks outperform after the initial resource estimate. So if you look at that Lassonde curve, when you get parabolic performance is in the exploration and discovery and the drilling stage. And so I would expect that market participants, in the same way that they would have, if Great Bear had been still a single entity rather than being acquired by Kinross when they came out with their resource estimate, in my opinion, would have disappointed, because the market was calling for plus 8, 10, 12 million ounces, and that isn't what occurred. And I would say the same thing has happened with Snowline. I think there's been more of a muted reaction, but I think I can think of very, very few circumstances when share prices have gone up after release of a resource estimate.
When Kinross did eventually put out a maiden resource on Dixie, that was, I think, around 5 million ounces in all categories.
Yep.
And as you say, that sort of people were expecting a lot more. Does the market always expect more? And if so, why do you think that is? Is it because they've been led to believe that there's more there, or it's better than it actually turns out being? Or is it just their own personal exuberant optimism that thinks it's going to be better than it perhaps is?
I think it's human nature when it's unknown and you have some positive information, you are always optimistic. So I think there's a human nature element. And I also think it's how we as an industry release drill results. So when we release drill results, obviously we release the good drill results. And so everybody's is getting exposed and basing their assessment of what it could be based on, and remember, the best drill results. And obviously those best drill results, they're within a sea of less good drill results. And so once you wrap the constraints of resource estimate around that, it will never, ever, ever, in my opinion, almost never, ever, I won't say never, very, very rarely delivers into expectation. So that's an issue. And also 99.9% of investors aren't technical. So the struggle that you face if you're technical, and I'm a geo and speaking to, geos and engineers, you see companies with assets that you go, that's a pile of crap. It's never going to be developed. It's not as good as everybody says it is. But for whatever reason, it's attracted the attention of the market, and it has a lot of positive promotion and exuberance behind it. And what we tend to see is when a share price goes up, people want to buy rising share prices rather than doing what they should be doing. And Buffett said it best: is you want to buy things when they're hated, not when they're loved. And so I think that. But stepping back, and so I don't necessarily think it's a company issue. Of course, companies will try and present the best versions of themselves. I suppose it's a bit like internet dating or Instagram. You're always showing the best of yourself, not the ugly pictures.
You've got a camera lighting your face at the moment, just like I have.
Exactly. So I think I just think that this happens time and time and time again. And so kind of back to understanding, you should be investing where you are in the cycle. You should understand that it's really, really risky to own juniors that have been amazing exploration successes when they start becoming real. And real is resource estimate and economic study. And so even though they're actually adding value, I mean, this is really ironic to me. So often a good time to buy, to invest in juniors actually is when they become real, if it's a high quality asset, because the market, they almost never exceed expectations. And the happiness equation is when reality exceeds expectations, and reality
Let me
varied.
take a little sidestep here, because you mentioned something that I think I find fascinating about human nature. And to what extent do you believe professional investors do this or not? Because you mentioned that everybody likes buying into or wants to buy into a rising stock price, because then it's not just you going out on a limb thinking something's amazing. Other people seem to be echoing your call and supporting that. If something's going down, if the market hates it today, in the back of your mind is the market's going to hate it more tomorrow, and it'll be even cheaper tomorrow. How many professional investors do you think actually operate like that and can actually pull the trigger when things are going down?
Very few. I think the hardest thing to do as an investor, professional or otherwise, is to sell. The absolute hardest thing. It's easy to buy. And the other struggle that institutional investors face, particularly with smaller companies, is you can get in, but you can't get out. As one of my ex-bosses said, exiting from a junior is a bit like a nasty divorce. It takes you 5 years and you lose almost everything. So it's positioning can be a negative as well. And so if I look at my own behavior and having worked on the buy side, it is absolutely the hardest thing to do is to sell. And it's really, really difficult to sell. So if you're down, say you're down 10%, you're going, oh, I know it might come back. And again, that's kind of this optimism that we have as humans, but it's better to sell being down 10% than it is to sell being down 90%. And look, I have made some very, very big errors. And so I've ridden one particular company all the way through to and including bankruptcy. So, I did learn from that lesson. So we all do it. And for me, I think the learning experience of that was, number one, I was very, very busy and I wasn't working on the buy side. So it was in my PA. And so I wasn't monitoring it, but it's also that optimism that we have. So I am so much better at selling. It's the key for me. That's the key lesson that I've learned over the last 20 something years. It's taken a while to learn it, but I feel like I'm finally there.
Well, that's it. It's the failures are the investment in your investment education, aren't they? Okay, let's have one more comment about Snowline before we put this one to bed. 7 million ounces, great start. But given that Snowline's site is quite remote, what size do you think Valley and Rogue will need to become to have a real shot at development?
Yes, you've hit the key point there. That deposit, if it was less infrastructure constrained, would be developed very rapidly. It's a great deposit. I think you need power, and the Yukon is rather bereft of power. And so the big development projects in the Yukon, I think without power, the chances of them going ahead in the near term are very, very, very slim. So I'm not even sure it's a size issue. I think it's an embedded infrastructure issue in the Yukon.
Okay, well, thanks for that. Let's end with some drilling results. Do you have a drill result for me that stood out to you for whatever reason?
Well, I'm going to pitch one that I exposed to. It's a couple of weeks old, but I think it's an interesting one for people to have on their radar screen. And again, buying directly after there's been a drill result, there's been a frothy move in the share price. Sometimes you kind of want to step back and settle. And so for me, Bravo, I was a director of Bravo. I'm not a director any longer, but I have a very a material position for me. And they came out, it's great. PGM deposit in Brazil. I love Brazil. I think Brazil is one of the best countries in the world to advance assets. And they came out with absolutely spectacular copper result. And so PGM deposit with a nickel overprint, and they have been doing great exploration. So doing detailed EM over the property and now drilling those targets. And they hit 14% copper over 11 meters and plus 2.3 grams per ton of gold, if I recall correctly. So that was in late May, and then in June, and a couple of weeks ago, they came out with a drill result from another a step out that they'd done, and again, great drill result. So for me, that's one to watch because you have this PGM asset, this very material emerging tier one PGM asset, and now it looks like you've got copper in there in the Carajás. And in the Carajás, for those of you of the audience that may not be familiar, this is a prolific copper gold belt. So it's got some of the largest copper gold, a deposit class called iron oxide copper gold in the world. And so I think it's one to watch in terms of what this could be in from a copper perspective. So, but I own shares, so I'm biased.
So the Carajás is where Vale has its copper projects, its copper heartland, and also Ero Copper is very active there with its mines there. I've got a copper hit. NGEx Minerals recently reported at Lunahuasi a step-out drilling, a step-out hole that intersected 727 meters, grading 1.66% copper equivalent. That extended the strike length of Lunahuasi to at least 400 meters. The deposit, or the ore body, or well, it's not an ore body yet, the deposit now measures at least 900 meters by 400 meters by 960 meters virtually. And I'll just throw in this week, Vizsla Silver hit visible gold in its highest grade intercept ever at Panuco in Mexico, 64 centimeters, grading 9,920 grams per ton silver and 663 grams per ton gold at Cupel in infill drilling. The expanded high-grade mineralization, the high-grade mineralization was expanded closer to surface. A maiden PEA is slated for delivery in the September quarter. Nicole, a tour de force, thank you very much for joining us today.
Thank you very much for having me.
And I'm Paul Harris, and this is Kitco Mining.